When you're new to investing, it can be a really complicated time. You've got to get used to lots of new different terms, understand the different kinds of instruments that you can invest in, from ETFs, index funds, cryptocurrency, and understand exactly where's best for you to put your money in your own situation. For me, the easiest way to start out with my very limited knowledge was using a platform called Vanguard, which, for those of you who've watched my channel for a while now, will have heard me talk a lot about. Vanguard is all about making investing as simple as possible and as accessible for the normal person as can be. They've got a wide range of different funds which are suitable to different people at different times of their life. The US version of Vanguard offers a wider range of products when compared to the UK version. However, if you're new to investing, the Vanguard UK platform is an excellent place to get started. Dip your toes into investing in a diversified and moderately safe manner. Today, we're going to look at the 4 different types of products that Vanguard currently offer in the United Kingdom and look at their advantages, perhaps when they're best suited for, and hopefully this will help you make a decision as to whether the different products are right for you. Let's hop straight into Vanguard and check it out. Under the What We Offer tab, Vanguard breaks its products down into 4 distinct categories: blended funds, equity funds, fixed income funds, and money markets. Each of these categories contain further different funds which are diversified either geographically, by sector, or by the product type that they contain. All of the funds within the blended section are highly diversified, and more often than not they'll contain more than one Vanguard fund within it. Essentially see these as a shopping basket of funds. If we further break the blended funds down, you can see that they're subcategorized by life strategy, target retirement, and global funds, each of which are slightly different. We'll start off with the Life Strategy Fund. The Life Strategy Fund is an excellent place to start for anybody who is new to investing. They offer a massive range of diversification across the global markets, and these are essentially or potentially the safest way for you to start your investing journey if you have little knowledge of investing and exactly how to do it. Vanguard's Life Strategy Funds have an ongoing charge figure of just 0.22%, which is fairly large for Vanguard as a platform, but when you compare that across the whole investing space, it is very, very low and incredibly competitive still. There are 5 types of Vanguard Life Strategy: the 20%, 40%, 60%, 80% and 100%. And this percentage point distinguishes exactly the percentage allocation to equities within the fund. The remainder is distributed to the bond market, so it gives you some consistent income into your portfolio whilst also being much less volatile than equities. All of Vanguard's life strategy products are highly diversified and contain a range of different Vanguard products within them. So you can click on any of these life strategy funds. So we've clicked on the 60% here. And if you click on portfolio data for any of the different ones, you can see it further breaks it down into the underlying Vanguard funds that are contained within that portfolio or that shopping basket of funds. The next group of blended funds are of course the target retirement funds. Personally, I don't invest in these funds, however I can definitely see the merits of them. Target retirement funds are essentially for people who know the date that they want to retire, and that's essentially the reason they are investing or saving for their future. Vanguard offers a range of target retirement funds at 5-year increments, and this means that you can choose the best fund for you at the time of starting to invest. And you'll continue to invest into that same product up until your retirement date. The fancy thing here is that Vanguard actually changes the allocation and the distribution of your portfolio as you get closer to your retirement date. So if you hop in, you can see the Target Retirement Fund 2015 has currently 33% in equities and 67% in bonds. The 2021 has 47% equities and 53% bonds. And you can see as you scroll down, you get further away from your retirement date, so 2050, 55, 2060, right down to 2065 here, where there is 79% in equities and just 20% in bonds. What this allows you to do is take more risk the further away from retirement you actually are. And it makes sure that as you get closer to retirement, most of your capital is stored in bonds, which are far less volatile than equities. If you're just investing for retirement, these target retirement funds are pretty unbeatable. They'll change your allocation as you get closer to retirement. You can set up a direct debit so you never have to even log into the platform unless you want to, and it really is the true form of set and forget investing. These funds have an ongoing charges figure of 0.24%, so slightly higher than the life strategy, and that's largely because the target retirement funds will change those allocations over time, so there's more management fees because of that. Again, if you click into any of these funds, you'll be able to look at the portfolio data, and again you'll see that they're made up of underlying Vanguard funds, a wide range of them, so your money is fully diversified. The final blended fund offered by Vanguard in the UK is the Global Balanced Fund, which is currently made up of 63% equities and 37% bonds. This is an actively managed fund, so we see a fairly high ongoing charges figure here of 0.48%. And this is because the portfolio is constantly balanced and constantly altered to try and make sure that you make the best returns on your money as possible. The portfolio data shows that the fund is currently comprised of 88 stocks or equities and 504 different bond markets. This again makes sure that your portfolio is widely diversified across a range of different markets and industries, and to ensure that you're not going to lose money if a particular area of the market dips. The fund also gives you great information on the holding details, so it breaks down each of the 88 stocks that are invested and also each of the 504 bond markets which are included in the fund. So if you are interested, you can go and dig around in that for some peace of mind and to see exactly where your money is being put. We then move on to the solely equities market. So these are individual funds rather than a blended approach which contains a shopping basket of different funds. On Vanguard, you'll find that most of the equity specific funds are ETFs or exchange traded funds. And for those of you who've watched my channel for a while, you'll know that this is what I am most heavily invested in within my Vanguard portfolio. Vanguard further breaks these equities down into geographical location, which makes geographical diversification in your portfolio a lot easier. So you can see here we've got Europe specific ETFs, we've got global specific ETFs, we've also got UK specific, of which there are quite a few because obviously we're looking at the UK Vanguard. We've got Japanese specific, Asia Pacific, the USA, and the emerging markets. And within each of these different funds, there are a different makeup of different stocks to make the portfolio as diverse as possible. ETFs commonly have a very low ongoing charge figure, which makes them an economical way to invest and really does reduce those outgoing fees over time. I believe the lowest ETF fee on Vanguard in the UK at the moment is the S&P 500, which sits at just 0.07%. This does increase dependent on the liquidity of the funds. For example, the emerging market funds sits a little bit higher than that. However, these are still far lower than other investing products out there on the market, especially actively managed funds. We've then got fixed income funds or bond markets. Now, personally, I steer well clear of bond markets purely because my investing horizon is still fairly large, of at least 30 years. So I don't want anything to do with bond markets at the moment. I see equities as giving me the best rate of return, and I'm still not adverse to risk at my age. However, bond markets are an excellent way to get continual income into your portfolio on a monthly, quarterly, or annual basis. They are far less volatile than equities, and they are far safer to invest your hard-earned cash in if you are worried about the risk. Again, Vanguard breaks these fixed income funds or bond markets down into geographical location, and they offer a range of different funds within each location. So you've got Europe, they offer corporate bonds, Eurozone government bonds, global bonds. We've then moved on to different UK bonds. We've got the gilt market, we've got the government bond market and the investment grade bond market, Japanese bonds, US bonds, as well as emerging market bonds. And obviously each carries a different level of risk. For example, government bonds in both the United Kingdom and the US are incredibly low risk, whereas if you look at government bonds within the emerging markets, they are at a slightly higher risk. The ongoing charges figure of all of these products varies wildly again. However, the US funds are usually more commonly lower priced, with the emerging market funds seeing a more premium price with regards to fees. So there we have the different range of funds that Vanguard offer on their UK based platform. Personally, I invest most of my money into ETFs at the moment. However, I can see the merits of life strategies, target retirement funds, as well as the whole suite that Vanguard currently has to offer. If you're interested in a particular fund and you want me to break it down in more detail, drop a comment in the box below and let me know what fund you're interested in, and I'll do a deep dive into that, looking at the fees, exactly what's being invested in, the risk, as well as a whole host of other things as well. If you are keen to get investing yourself and you've already got Vanguard, why not try signing up to Trading 212 or Free Trade? I've got links down in the description below which gives you a free share when you invest over £2 in either of the platforms. I know Trading 212 has currently got its new sign-ups closed, but Free Trade is just as good as Trading 212 and it's still taking people on. So links both down in the description below there. And if you are looking to make any extra money, one of the ways that I've managed to make additional money to invest every month is through a process called match betting. I've got a new match betting video coming very, very soon, so keep your eyes out for that. But it's a really easy way to make tax-free money every single month in a risk-free way. So if you are interested in that, I'll pop a link up above to one of my old videos, and there's a link down in the description below to help you sign up to Profit Accumulator, join a free trial where you can make £45 absolutely risk-free and see if you like it as well. So if you fancy that, links down in the description below. With that said though guys, thanks again for stopping by, and I'll catch you in the next one.